The banking cartel has a name for the phenomenon that is about to destroy their paper leverage. They call it industrial cannibalism. It happens when a technology becomes so vital, so irreplaceable, that the companies building it are forced to consume the very market that feeds them. As we sit here in the opening weeks of 26, the Samsung Shock has officially transitioned from a laboratory curiosity to a thermal detonator placed under the foundation of the global silver market. For years, the narrative from the paper liars in London was that electric vehicles were a silver-neutral story. They told you that the silver used in the solder and the circuit boards was negligible, a few dozen grams per car at most. They wanted you to believe that the Green Revolution was a story about lithium and cobalt, and that silver was just along for the ride. But the physical truth is far more aggressive. The Ag-C anode breakthrough, the silver-carbon composite layer pioneered by Samsung SDI, is the single most important technological shift in the history of transportation. To understand why, you have to understand the dendrite problem. In traditional lithium-ion batteries, as you charge and discharge, microscopic spikes of lithium, called dendrites, grow like jagged ice crystals inside the cell. Eventually, they pierce the separator, causing a short circuit, thermal runaway, and the catastrophic fires we've seen on nightly newsreels for the last decade. For the Dream battery, the solid-state pack, to work, those dendrites must be stopped. And as it turns out, there's only one element on the periodic table capable of regulating lithium deposition with the precision required to prevent a meltdown. That element is silver. By applying an ultra-thin silver-carbon layer, just 5 micrometers thick, Samsung hasn't just improved the battery, they have rewritten the laws of what an EV can do. We are talking about 600 miles on a single charge. We are talking about a 9-minute recharge time. We are talking about a 20-year lifespan. This isn't an incremental upgrade. This is the moment the internal combustion engine was officially rendered a museum piece. But here's the mystery the banking cartel doesn't want you to solve. Where is the metal going to come from? In 1873, the Fourth Coinage Act, better known as the Crime of 73, was passed to demonetize silver. The bankers of the 19th century realized that if silver remained the people's money, they couldn't control the expansion of credit. They had to kill the physical foundation to protect their paper empire. For over 150 years, silver was treated as a discarded byproduct of lead and zinc mining. It was suppressed, ignored, and pushed into the behavioral sink of the commodities market. But today, the Obtainium has returned. Samsung is no longer looking at silver as a precious metal to be traded in a vault. They are looking at it as a structural foundation for their survival. Without that silver-carbon layer, their solid-state dream is just a paper promise. Imagine a world where the most powerful corporations on Earth, Samsung, Toyota, and BMW, suddenly realize they are competing for the same shrinking pool of physical atoms. They aren't interested in the paper price on the COMEX. They aren't interested in your paper lies. They need the physical truth in their factories. The banking cartel has spent 40 years teaching you to look at the price. Samsung is teaching the world to look at the inventory. When the world realizes that 1 kilogram of silver is the only thing standing between a car that takes an hour to charge and a car that takes 9 minutes, the behavioral sink will collapse. The silver-carbon layer is more than a breakthrough. It is a declaration of war on the paper shorts. The Ag-C anode is the silver bullet that was forged to kill the paper market. The banking cartel thrives on one specific type of ignorance, the inability of the public to do the narrative math. They want you to look at the silver price on a digital screen and see a commodity. They don't want you to look at the factory floor and see a vacuum. To understand the Samsung Shock, you have to understand the sheer violent scale of the numbers they are trying to hide. In the old world, the world of 2024, the average electric vehicle was a minor player in the silver market. It used roughly 25 to 50 grams of silver, mostly for the conductive glue that held the electronics together. To the bullion banks in London, this was a manageable drip. They could paper over that demand with a few keystrokes. But as we enter the second week of January 26, that drip has become a liquidity tsunami. Samsung's solid-state execution requires 1 full kilogram of silver for every single high-capacity battery pack. Let that settle in your mind. 1,000 grams? In the language of the old world, that is more than 32 troy ounces of physical truth, buried in the chassis of a single car. We are no longer talking about grams for circuit boards. We are talking about bars for batteries. Now, let's do the math that keeps the CEOs of the LBMA awake at night. If this technology captures just 20% of the global automotive market, a conservative estimate, given the 600-mile range and 9-minute charge time, the demand for silver would explode by 16,000 metric tons every single year. To put that in perspective, the entire planet only produces about 25 to 26,000 metric tons of silver annually. Think about the behavioral sink this creates. In a world where one single industry suddenly demands over 60% of the total annual supply, what happens to the solar industry? What happens to the military-industrial complex that needs Obtainium for its guidance systems? What happens to the electronics in your pocket? The answer is simple. They fight. For every single bar of silver that comes out of a mine in Mexico or Peru, there are now 4, 5, or 6 different industrial titans trying to grab it before it ever reaches the open market. This is why the paper lies of the COMEX are failing. The bankers are still trying to sell the same ounce of silver to 400 different paper speculators, but Samsung doesn't want a paper contract. They want the atoms. When a company like Samsung, with a market cap that rivals mid-sized nations, realizes that their entire future depends on a metal that is in a terminal deficit, they don't wait for the price to behave. They move to secure the physical truth at any cost. We are seeing the end of the retail silver market as we know it. For decades, the cartel used the behavioral sink to convince you that silver was a poor man's gold, something to be bought in small coins and stored in a sock drawer. They wanted you to stay small so they could keep the liquidity tsunami for themselves. But the math is now terminal. The world's total above-ground silver stocks, the bars sitting in the vaults of London and New York, represent only a fraction of what is needed to put just 1 year's worth of solid-state cars on the road. For every 1,000 grams Samsung needs, the cartel only has a few dozen grams of physical truth left to give before they hit the bottom of the vault. This isn't just a price hike, this is an execution. The paper-to-physical ratio has become a joke. The bankers are standing on a stage, waving 370 pieces of paper for every 1 bar of silver, while a line of industrial giants is already at the back door, taking the bars directly from the refiners. The Samsung shock is the moment the liquidity tsunami hits the wall of the terminal deficit. We are moving toward a reality where the paper price will simply cease to matter, because no amount of paper can build a battery. If you think $130 is high, you haven't done the math. When 60% of the world's supply is spoken for before it even leaves the ground, the remaining 40% becomes the most contested obtainium in human history. If you want to understand the fragility of the paper lies we've been fed, look no further than the events of January 3rd, 26. While the mainstream media was obsessed with the political theater in Washington, a real-world supply chain execution was taking place in the red zone of Latin America. With the launch of Operation Absolute Resolve and the capture of Nicolas Maduro in Caracas, the United States has officially turned the world's most resource-rich region into a geopolitical vacuum. But this isn't just about oil, and it certainly isn't about democracy. It is about the strangulation of the physical truth. For years, the banking cartel relied on a steady, invisible flow of silver from the mountains of Peru and the mines of Chile to keep the paper market from collapsing. This metal didn't come from primary silver mines. It came as an accidental byproduct. 7 out of every 10 ounces of silver produced on this planet are not mined intentionally. They are the secondary output of mining for copper, lead, and zinc. But as the red zone erupts into instability, that accidental supply has hit a brick wall. The naval blockades in the Caribbean and the disruption of the Pacific sea routes, the very corridors that the world's biggest silver exporters in Peru use to reach the global market, have effectively created a supply vacuum that cannot be filled. The banking cartel wants you to believe that the supply is inelastic, that no matter what happens in the world, the silver will keep coming because the copper mines need to keep running. But they are ignoring the behavioral sink of the logistics chain. When the sea routes are jeopardized and the insurance premiums for cargo ships in the Latin American corridor triple overnight, the physical metal doesn't move. It sits in warehouses at the port, while the paper contracts in London continue to trade as if nothing has changed. This is the red zone strangulation in real time. Think back to the Bronze Age collapse of 1177 BC. For centuries, the Mediterranean civilizations relied on a complex, globalized trade network for tin, the Obtainium of the ancient world. They didn't have tin in Egypt or Greece. They had to get it from thousands of miles away. When the sea routes were cut by regional instability, the entire system didn't just slow down, it vanished. The empires that built their power on bronze realized too late that their paper promises of trade were worthless without the physical atoms of the metal. History is rhyming again. Today, our bronze is silver, our tin is the conductant for the Samsung battery, and the sea peoples of the modern era are the geopolitical flashpoints that have just severed the West's access to the southern hemisphere's mineral wealth. While Samsung creates a demand for 16,000 metric tons, the red zone conflict has effectively removed millions of ounces of monthly byproduct supply from the reach of the Western refiners. The U.S. military strike in Venezuela wasn't the end of the crisis. It was the trigger for a regional shift that has made every silver ounce in Latin America a national security asset. The banking cartel is trying to maintain the paper lie that the market is well supplied, but they are counting ounces that are trapped behind a naval blockade. They are counting silver that is sitting in a vault in Lima, waiting for a ship that isn't coming. The liquidity tsunami is meeting the supply vacuum. In the old world, the cartel could just call up a refiner in Mexico or Peru and have the metal delivered to London to smash the price. In the world of 26, that phone is ringing in an empty room. The physical truth is that the West has lost control of the supply routes. And when the largest industrial players, the Samsungs and the Teslas of the world, realize that the silver they were counting on is stuck in the red zone, the panic won't stay in Caracas. It will explode in the heart of the COMEX. We have reached the point of no return, the moment where the paper lies of the banking cartel are being discarded by the very titans they once controlled. Welcome to the era of the corporate seizure. I'll think back to 1933. The world was drowning in the fallout of the Great Depression, and the United States government realized that their paper dollar was a hollow promise. To save the system, they didn't just raise taxes, they committed the ultimate theft. Executive Order 6102. They forced every American citizen to hand over their physical gold under the threat of 10 years in prison. The state knew that in a time of collapse, the only way to survive was to physically possess the foundation. Today, in the second week of January 26, we aren't seeing a government seize gold from its people. We are seeing the tech giants, the new sovereign powers of the digital age, seizing the silver supply from the market. For decades, companies like Samsung and Tesla were content to play the cartel's game. They bought their silver from the open market, trusting the paper promises of the COMEX to deliver the metal they needed for their circuit boards and solar panels. But the Samsung shock has changed the math of survival. When you need 1 full kilogram of physical truth for every car you build, you can no longer rely on a middleman who sells the same ounce to 400 different people. Just a few months ago, in October of 25, we saw the first shot in this new corporate war. Samsung didn't go to the London bullion vaults to ask for more metal. They went straight to the source. They signed a multi-million-dollar offtake agreement with a junior mining company in Mexico to restart the La Parrilla mine complex. This is the corporate seizure in action. Samsung is essentially saying, we don't trust the paper price, and we don't trust the banking cartel to deliver. We are taking the mine itself. By providing the capital to restart an idle mine in Durango, Samsung has bypassed the entire Western financial system. They have secured 100% of the Obtainium produced by that mine for the next 2 years. They aren't buying silver, they are buying the earth that holds it. This is the birth of the vertical monopoly. Imagine a future, just months away, where you can walk into a coin shop and find the shelves empty, not because people are hoarding, but because every single ounce coming out of the ground has already been spoken for by a battery manufacturer or an AI chip designer before it was even refined. The banking cartel is terrified of this. Their entire power structure is built on being the gatekeepers. They control the price by controlling the flow of paper. But when the industrial giants start buying the mines directly, the gatekeepers are rendered obsolete. The behavioral sink is now working against the banks. The more they try to suppress the price to protect their short positions, the cheaper it becomes for Samsung to buy up the remaining miners. We are witnessing a repeat of the 1930s, but with a high-tech twist. In 1933, the state seized the gold to back their new paper empire. In 26, the corporations are seizing the silver to back their physical survival. They know the liquidity tsunami is coming, and they are building their own private levees out of physical truth. The paper-to-physical ratio is 400 to 1 in London, but on the ground in Mexico, the ratio is 1 to 1. 1 ounce of silver in the ground belongs to one corporation in Korea. There is no room for speculators. There is no room for the banking cartel. And most importantly, there is no room for you. When the titans of industry stop trusting the banks and start buying the mines, the paper lies have officially reached their expiration date. The Obtainium is being locked away in private vaults, and the physical truth is that if you don't own it now, you may never have the chance again. We have arrived at the behavioral sink of the banking cartel, the final phase of the system's collapse, where the paper lies can no longer suppress the physical truth. As we move through January 26, the mainstream analysts are scrambling to catch up to a reality that the insider profit has been warning you about for months. Look at the headlines from last week. Bank of America dropped a bombshell on January 7th, projecting that silver is no longer tethered to the $20 or $30 ranges of the past decade. Their modeling now suggests a move into the range of $135 to over $300 per ounce. Even the conservative desks at UBS are whispering about triple-digit silver as a mathematical inevitability. Why is $130 the new floor? Because of the liquidity tsunami meeting the Samsung shock. For years, the cartel used the paper-to-physical ratio to trick you. They told you that the price was determined by a group of men in a room in London trading digital promises. But in the world of 26, the price is being determined by the Obtainium requirements of the most powerful industries on Earth. When a single technology, Samsung's solid-state battery, requires 1 kilogram of silver per car, the paper price becomes a ghost. Do the narrative math one last time. For every single 1,000-gram bar Samsung needs to build just one premium electric vehicle, the banking cartel is currently holding hundreds of paper contracts claiming they own that same metal. But you cannot build a battery out of paper. You cannot power a 600-mile range with a digital promise. We are witnessing the grand decoupling. The physical truth is that the silver market is in its 6th consecutive year of a terminal deficit. We have burned through the above-ground stockpiles. We have depleted the registered vaults of the COMEX. And now, the red zone export bans from China and the supply vacuums in Latin America have cut off the final emergency exits. The cartel is trapped in their own behavioral sink. They have shorted so much paper silver that they have effectively sold the entire annual production of the planet 4, 5, and 6 times over. In the old world, they could just print more paper to drive the price down and scare the retail investor into selling. But Samsung isn't a retail investor. Samsung is a predator looking for atoms. When the industrial giants stop looking at the ticker and start looking at the vault, the price doesn't just go up, it resets. The $130 floor isn't a target, it is the price of admission. It is the level at which the paper-to-physical ratio begins to snap. It is the point where the bankers realize that to settle their debts, they have to pay the physical truth price to someone who actually has the metal in their hand. History tells us how this ends. Look at the Nixon shock of 1971. When the world realized the U.S. didn't have the gold to back its paper promises, the system didn't just adjust, it transformed. The dollar was decoupled from the metal, and the price of physical truth exploded. Today, it is silver that is being decoupled from the paper system. The liquidity tsunami is here. The Samsung shock has provided the spark, and the red zone has cut the fuel lines. As we close this intelligence briefing, the mystery we opened in the beginning is solved. Why did China close the gates on January 1st? Why did the US strike in Venezuela? Why is Samsung buying mines? Because they all know that the era of paper lies is over. They are all positioning themselves for a world where obtainium is the only real wealth. The banking cartel will tell you that the market is volatile. They will tell you to stay calm and stay in paper, but the insider prophet knows better. The behavioral sink is collapsing, and the physical truth is the only thing that will be left standing. When the paper market finally defaults, and it is happening in slow motion right now, what will you have in your hand? A promise from a banker who has nothing to give, or the 1 kilogram of silver that the future of the world is built on? The gates are closed. The math is terminal. The Samsung shock has guaranteed the floor. The briefing is complete. Secure your physical truth before the obtainium vanishes forever.